Hi guys, it's Stock Curry, and stocks continue to rally with great economic news and companies beating earnings, but there are some problems brewing on the horizon that could send stocks crashing soon, and you need to know about what's coming up. So let's get into it! Let's get things started with the great economic news that came out today. Retail sales jumped 3% in January, smashing expectations. The sales report indicates that even with elevated inflation pressures, consumers continue to spend, and that is great news for the economy. But the data comes as the Federal Reserve is grappling with rising prices that appear to be slowing down, but are still well ahead of the central bank's 2% annual target. Markets are currently expecting the Fed to approve a 0.25% rate hike at each of the next two meetings, and then pause to assess the impact that monetary policy moves have had on inflation. Keep in mind that consumer spending makes up about 2/3 of all economic activity in the U.S. Now, the problem is that the Fed rate increases are designed to reduce demand. And what the retail report that came out today shows is that demand is not going down, even in the face of high inflation, even as prices continue to rise. Consumers continue to spend money, and they're actually spending money at a faster pace than prices are going up. Keep in mind that CPI showed prices increased 0.5% month over month, yet consumer spending increased 3% month over month. And this is great news for the economy, but it's bad news for the Federal Reserve because it means inflation is going to be a lot harder to get back down to that 2% range. And what it could mean in the future is that the Federal Reserve might have to raise rates faster than they're expecting to, or higher than they're expecting to, in order to get inflation down. And if they do that, that could spell bad news for the markets. So great news for the economy, but possibly bad news for the markets. It's just one of those situations where good news is actually bad news. However, in the short term, the market continues to rally because in the short term, good news is good news, bad news is good news, and no news is good news. Now let's talk about what's happening with some individual stocks. Ford has paused production of their F-150 Lightning for at least 2 weeks. There's a potential problem with the battery in the Ford F-150 Lightning. Now, they're still trying to address this issue and get it figured out, but what's certain is that with production being paused and the F-150 Lightning having problems even before it's off the assembly line, this is bad news for Ford stock. And we have seen Ford drop over the past 2 days. Well, guess what? It's also great news for Tesla stock. We have seen Tesla absolutely skyrocket over the past 2 days. And this has been the story time and time again. A lot of car manufacturers are trying to produce EVs in order to compete against Tesla. But over and over again, those companies are having problems, and Tesla's cars continue to dominate the market, and Tesla stock continues to rally as well. Now moving on to earnings, Roku was up 12% on the day going into earnings. Then they beat earnings expectations, rose another 11% after hours, a 23% rise on Roku today. Unbelievable. Same thing with Twilio. They were up 6% during the day. They beat earnings expectations. They were up another 13% after hours, a 19% rise on this stock during the day. Zillow, same thing. They were up 4% during the day. They beat earnings expectations. They were up another 4% after hours, an 8% rise on the day for Zillow. And Shopify also beat Q4 earnings on both revenue and their earnings per share. Unfortunately, Shopify missed their revenue forecast, and that sent the shares down after hours. Even though Shopify was up over 6% during the day, the weak forward guidance caused the shares to drop over 10% after hours. So that's all of the good news that's causing the stock market rally to continue. Now let's talk about some of the bad news, some of the warnings and headlines that are coming out that could cause the market to go down later this year. The Congressional Budget Office, or CBO, warns that the United States will default this summer unless Congress raises the debt limit. The United States Treasury will exhaust its emergency measures to prevent a debt default sometime between July and September unless Congress raises the $31.4 trillion debt limit. Now, to be clear, the United States has never defaulted on its debt payments, and the debt ceiling has always been raised. There has never been a time in U.S. history where the debt ceiling was not raised, and I do believe the debt ceiling will be raised once again. That's not really the big concern here. Top Republicans and Democrats on Capitol Hill have repeatedly assured the public that the United States will not default on its debt, and that an agreement will be reached and a bill passed in time to avert a crisis. Now, that's absolutely true. This always happens, but the stock market gets a little bit scared once we start getting closer to the United States running out of money. And a lot of times what happens is the stock market will start to sell off once we get close, especially if it ends up resulting in a government shutdown, which very often it does. The United States will technically run out of money. The US government will completely shut down. We'll see the stock market drop pretty severely, very quickly. And then usually over a weekend, in the last minute, the last hour before catastrophe, the Republicans and senators and congressmen and Democrats, and they all come together and they make an agreement and they save the day and everything's good. And then the stock market goes back up. This is just kind of the way it works, but just know that whenever we get close to the U.S. running out of money, that the stock market will usually sell off for about a week or two until the problem gets resolved. Now, a far bigger issue that the Congressional Budget Office raised is that sometime in the next 10 years, the United States is going to be in a very dire situation. The CBO revised its projection for the size of the annual federal budget deficit over the next decade. The agency now believes that the deficit will total $18.8 trillion over the next 10 years, a figure that is 20% higher than the agency's estimate last May of $15.7 trillion. And the real problem is that the agency projected that tax revenue will not keep pace with these rising costs. And certain tax revenues are expected to fall, like those from gas taxes, as more Americans drive electric vehicles. So sometime in the next 10 years, the United States will be spending more money than they bring in taxes, even as they borrow money and they continue to increase the debt ceiling. The U.S. will not have enough money to even pay the interest payments on the debt. And this is really a dire situation. Sometime in the next 10 years, Congress is either going to have to reduce spending or they're going to have to raise taxes. And let me tell you, Congress never reduces spending, which means there's only one solution left, and that's that taxes are going to go up. They have to go up. And this is going to slow down the U.S. economy even further, which could put some more downward pressure on stocks. But again, we're talking sometime in the next 10 years. Nothing to worry about now, but certainly going to be really bad news for the U.S. economy over the next decade. Now, the last thing that we need to talk about is crypto. Whenever crypto goes through any sort of crypto winter, and there's been 3 of these before, we're in the 4th one now, the cryptocurrency markets generally will see 3 legs down, 3 major drops downward. So far, we've seen 2 major drops downward. We have not yet seen a 3rd one. And this has a lot of people who are investing in crypto and they understand crypto to believe that we still have another major leg down in crypto before we reach a bottom and start going back up again. And the question has always been, well, okay, what's the catalyst? What is actually going to cause crypto to have this major epic crash? And there might be a catalyst on the horizon. The SEC has proposed a rule that could squeeze cryptocurrency platforms. The proposal would impose heightened standards on entities that hedge, pension funds, and others use to hold customer assets. Now, without getting into all of the nitty gritty details, the SEC rule essentially is going to prevent investment bankers, hedge funds, pension funds, and even financial advisors from putting customer funds into cryptocurrencies. And if this rule goes through and actually goes into law, what will end up happening is we're going to see a major sell-off in cryptocurrencies because hedge funds, pension funds, individual investors, financial advisors, institutional banks, they're all going to have to pull money out of crypto in order to get in line with these new regulations. And that could trigger the next major leg down in cryptocurrencies. Now, it's not entirely certain when this rule would go into effect or when it would become law or even go from a proposal to approved, but this could trigger that third major leg down that possibly gets Bitcoin down to that $12,000 to $15,000 level there. I think Bitcoin's going to bottom out at. So keep your eye on this one because crypto probably will have one more major leg down before it bottoms out. And guys, if you want to take advantage of this rally and get some free stocks, I always recommend you have multiple brokers, with each brokerage account having its own individual portfolio, its own strategy. So maybe you have your value stocks in one portfolio, your growth stocks in another portfolio, you do your trading in another portfolio. And I do recommend that you have multiple portfolios. So if you want to be smart and get another portfolio open while also getting a lot of free stocks, I recommend you open it up an account with Moomoo. Moomoo is going to give you up to 15 free stocks when you open an account with them and deposit $1,000. If you can only deposit $100, you're still going to get 5 free stocks with Moomoo. If you want to take advantage of that, you can sign up using my link in the description below. It's stockcurry.vip/Moomoo. That's stockcurry.vip/Moomoo. If you enjoyed this video and got a lot out of it, then be a good friend and share this video with your friends and family so that they will know what's going on in the market as well. And don't forget to hit the like button and subscribe. And if you missed the last video where I talked about the CPI report and why the market rose on bad CPI data, go watch the last video that I uploaded here.